Welcome back, everybody. Today I have a lesson for you. I want to talk about market feedback and why market feedback is important and why it's so important that this is one of the main differentiation between someone that is a losing trader to someone that is a consistent trader. And we are going to go and talk about the three main type of traders that in general. So let's dive right into it, starting with market feedback, right? So market feedback basically is what you get back from the market once you have taken an action. For example, let's say you've taken some trades and then you have some losses, right? So let me just, try and so you took some trades, right? Let's say you took 5 trades, right? And you have 5 losses, right? 5 losses. What does that mean, right? It means something. What does that mean, right? I'm not going to tell you what that means because I just want you to understand this is market feedback. Now, let's take another scenario, right? Not, 5 trades and 5 losses. You took 5 trades, right? And you have 3 wins, all right, and 2 losses. Is it the same market feedback as what happened earlier when you have 5 losses in a row? No, it probably means something totally different. And what about this scenario, right? Totally different scenario. Let's say you have 5 trades, right? 5 trades, but you have 5 winning trades, right? What do you think about this? Even more different than earlier, right? Means something different entirely in thinking about the market itself. So market feedback out of your own action, your own trades is one type of feedback. What's another type of feedback, right? So we talked about our own trades. So let's say this is our own trades. Let's talk about leaders, right? Let's put L for leaders. Now, what type of feedback can you get out of leaders? So let's say you identified 5 different leaders that moved first, all right, within the market once it moved up, and they moved the biggest out of the big caps, because to be a leader you need to be a big cap, right, or at least a medium cap. For example, we had Rune back in, let's say back in, from October to November to December, right? We had Soul, right? We had I and J, right? We had AVAX. Those are, everyone knows these ones, right? Now I would say that we had Cass as well, which was a market leader. Now Rune was the first one to fail. It moved 300%, and then while in November and December, actually, once they started to consolidate sideways, Rune actually broke out, all right, and went down. So it failed the breakout. That is a clue. That is feedback from the market. So you get leaders feedback, right? But all right, only one. But then you had Soul continuing, you had I&J continuing, AVAS continuing, Cass big trade. So the rest of the leaders still worked well. Moving forward, we got to December, mid-December, right? Solana reached 100 and something dollars, I&J $50, AVAX $50 almost, Cass 15 cents, but they didn't see any new highs. Even I would argue that I&J attempted to break above the 50 but failed, or 40 something, okay, and failed. Then everything, all the rest of the leaders started failing too and getting to new lows. So this is leaders feedback. Now this is very specific, but you can say that leaders feedback is part of what I'm trying to convey here, market feedback in general. So the M itself can be, how is the market looking? Do we have setups, right? Do we have setups proliferating, all right? Or don't we? Lately we've seen, all right, less setups proliferating. So this tells you something. This is market feedback. It's telling you that there's not a lot of breakouts, right? You saw Bitcoin, all right? Bitcoin having, all right, a fake out, right? And then going down. So it attempted a breakout but went down. That's a fake out. That's an FO. That's a fake out. And Bitcoin is like the market. It's like an index for crypto. So if BTC is failing, you know that there's a high probability chance that the rest of the market is under pressure too. So this is all under market, right? By the way, everything is market feedback, right? the traders feedback, the trading feedback, the leaders feedback, the rest of the market feedback, everything falls under market feedback. It's just a name for feedback. All right. So again, I want to reiterate, feedback is, all right, one of the most important things that a trader needs to understand in order to become successful and consistent trader, right? To make more money than he loses in the market and to keep the majority of what he makes, right? And that is what we try to do in our group. By the way, if you haven't done so, just give me a like, and if you didn't subscribe to my YouTube, subscribe to my YouTube as well. Give me a comment, right? But that's what we're trying to do in our group. We are trying to keep, all right? We're trying to keep the majority of the dollars that we make, all right? Keep the majority of the dollars that we make. And as I said earlier, we want our PNL, all right? We want our PNL to look like this: up, sideways, a little bit down, all right? Up, sideways, a little bit down, up, sideways, a little bit down. This is how a PNL of a very successful trader looks like. It's not like this. It's not linear. Nothing is linear, right? But it looks like this. So now that we understand market feedback and we understand why this is really important for us, let's talk about the different type of traders that we have and how they have do they have respect to market feedback or not. So let's talk first about the loser trader. What is a loser trader, right? A loser trader is just a trader that loses more often than he makes money, all right? So let's say he started with 10K, all right? After a while, he will have 5K, right? Or 8K, right? Doesn't matter, or 3K. Or he will go bust, we lose all the 10K. That's a loser trader. Now, why a loser trader is a loser trader, right? Now, many different things, all right? But I would say that the majority of why a loser trader is a loser trader is because he's not trying to learn a specific edge, like the basics, all right? The basics of trading, all right? Maybe maybe he doesn't know some like principles, the fundamentals of trading, all right? So the fundamentals of trading, like risk management, right? He doesn't know how to risk manage. He doesn't know how to position management. He doesn't know how to take rewards, so reward management, all right? He doesn't know all this. Doesn't have basics. Moreover, he doesn't have an edge, all right? An edge is a system that you utilize to get into a trade and out of trades, and you replicate it over and over and over. So he does not have a trade. He does not have the fundamentals. He does not have anything, right? He is only attempting what he has on his mind is only how can I buy, all right, in the coins. How can I buy? Where do I buy? When do I buy? He doesn't think about risk, right? Doesn't think how much he can lose. He doesn't think about the reward. How long should he held the reward, all right? He doesn't know the relationship between risk and reward, because let's say each time you lose 10%, but each time you win, you lose 5%, all right? So you need 75%, all right, winnings in order to be break even only. That doesn't work usually. Usually you will have more or less 40-50%, win rate. So don't understand this, right? They just want to get in. They want in the action, right? They just want in the action. And because all of this, right? Because all of this, because they don't have any principles, no fundamentals, because they don't have an edge and they try anything beneath the thumb, because they don't think risk-reward relationship, because they don't cut their losses short, their P&L looks like this. With periods of, small winnings, all right, where he thinks maybe he got things under control, with bigger losses. Eventually, let's say he started with 10K and goes all the way down to big fat zero, all right? Big fat zero. Very sad person. Very sad person. And sometimes they do it multiple times. Sometimes they will attempt this 3 times and they will lose overall, 30K, all right? Because they don't understand. They need to learn. They don't understand that they need to execute on an edge. They don't. They just assume they can go into the market, all right, and makes money. Now, sometimes they get in and actually instead of going down their P&L, the P&L will go boom like this because they entered in a bull market, all right? They started with 10K, they actually went to 100K, all right? But then everything won't go back down to zero. Doesn't matter because they don't understand. They think they know something, but the reality is that the market saved them. They got in at the right place at the right time. And what happened here is they didn't understand that this phase, all right, the market feedback should have told them to stop trading over here at the $80,000. But they don't. They don't care. They just care about the action. And that is the problem of a loser trader. Now, if you evolve a little bit, all right, if you evolve a little bit, just a tiny bit, all right, you can become what is called a boom and bust trader, right? Now, what is a boom and bust trader? A boom and bust trader is someone that understands some fundamentals, right? He knows to take his risk, all right, limit it, maybe cut it short. He knows that he has reward he needs to manage. Maybe he knows how to manage some relationship between risk and reward, all right? So he has some fundamentals. He has a certain edge, all right? He does, a breakout trading. He does breakout trading and he knows how to make money doing breakouts, mainly when the market environment, ME, all right, is very helpful for breakouts, all right? Now, he understands. He actually read some books. Maybe he's done some course, maybe a technical analysis course. So he's actually doing some things that are good, all right? That are good. Now, the P&L curve for a boom and bust, all right, is something like this, all right? Maybe he starts in the bull market, then what happened to a loser trader? But you know what? He then breakouts start working again. Maybe he makes more money, but then goes back down. He started at 10K, all right? This is 10, went to 100. This went to 30, this went to 150, this went back to 10, and now he's back in the money again, but only to 80, and then back, and maybe he's actually back to 5K, now maybe he's back to 20, maybe he's back 10, and so on, boom and bust, and boom and bust, but he's never profitable. He's never long-term consistently profitable because he doesn't understand market feedback. He doesn't understand to stop doing breakouts. Market feedback is telling him to stop taking breakouts over here. Is at, let's say, the 80 over here, right? It went all the way to 30. Instead, if he would wait at 80 when breakouts will happen again, so from 30 he made 100K, he would go to 180, all right? 180, and then instead of going down to 10, he will stop at around, let's say, 150, all right? And then up again. Instead of, giving all that money back each time that the market changes, right? That is a big issue for the boom and bust trader, right? Now, it's unfortunate because he's really trying. In contrast to a losing trader, all right? In contrast to a losing trader, he actually understands that he's not in it for the action, at least, partially, all right? At least partially because they still have a lot of issues. But he's in it, all right, for the money, right? A loser trader usually is just in for the action. But boom and bust, they may be understanding just a little bit, all right? They maybe understand. And it's unfortunate. It's unfortunate because their P&L is really painful because it's like this, And they do have these periods, right? They don't go bust all the way, and they do have these periods where they make money, but they don't know how to listen to market feedback, and that is why they give it all back multiple times. Sometimes, same as a loser trader sometimes loses his account multiple times. A boom and bust trader will make these cycles multiple times. Now, I don't know what's worse, to lose 30K because you're a loser trader, or to actually be able to make money and then lose it multiple times after you made it. At least, I think this is more painful, all right? This is more painful. Now, the last trader is the consistent trader, all right? Now, inconsistent trader, you have the small consistent trader, all right, and the wildly profitable, right, wild one. Let's talk first about the small one, all right. The wild one, we're going to talk about it in just 1 second. So the small trader, all right, in contrast to boom and bust, so he has fundamentals, he has, technicals, all right, very good, he has both of them, he understands everything, and he understands market feedback, right, he understands market feedback, right, so his P&L, right, will be something like this, all right, something like this. He makes a move up, then gives some grounds back down, then another move up, sometimes he will climb a little bit up, maybe give some down, climb again, another one up, then again something like this, climb, maybe sideways, climb, sideways, climb, sideways, move up, right? This is good, but this will take him, let's say, 5 years, right, to make it. Is this good or is this bad? Of course it's good. He's a consistent trader. He takes out, all right, he takes more winnings, all right, than he has losers. So actually the other way around. So more winnings than losing, right? I always say to make $200,000, all right, in the market, all right, I need to make $400,000 and lose 200 in the middle, and I'll be left with $200,000. So it's okay to be losing, all right? It's okay to be losing some, but you need your total winnings, all right, 400K, to be bigger than your total losses, 200K, in order to maintain profitability, all right? In order to maintain profitability. So again, has fundamentals, have technicals. He has an edge as well. Sorry, I didn't say that. He has an edge, something that he can replicate over and over and over and over again, all right? He understands market feedback. He knows when to stop. He knows to recognize these periods to not drive himself down the ground. He knows to stop trading or maybe go to short a little bit. He understands these mechanics, right? He understands. But he's not wildly profitable. He makes money. Making money, right? Each person is, even $1 million is money, right? Even $100,000 is good money. People make that. This is consistent. This is good. This, where you get to this level, this is good. Out of the three, so far, this is the best, of course. Loser trader is whenever you all start as a losing trader, right? Then we all go to the boom and bust trading, all right? Mainly if we start in the bull market. And then hopefully 10% only, all right? Only 10%, by the way, only 10% of you will achieve consistency, right? Sorry, I don't want to be the bearer of bad news, but this is the reality. Only 10% of people get consistency. But out of these 10%, 9% more or less, all right, are just consistent and they make money, but it's good. But the 1%, all right, are wildly profitable, and their P&L is something like this. Boom, 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 and just each time it just boom, boom. Yes, every now and then, boom, drawback, but then boom, all of a sudden again go wildly up, all right, wildly up. In the difference between a wildly profitable trader and a consistent trader, just a small consistent trader, small is good, by the way, is mindset. And mindset will be something we'll talk about in a different video, all right? Different videos actually, because multiples, mindset is a big concept about mindset. But bottom line, right? Bottom line, we go over this again. We wanted to talk about market feedback in this video, right? And we argued that market feedback is what you get out of your own trading, all right? What you check the leaders, and out of the rest of the market, what it does, right? Are the trades working, all right? Do you have 5 winning trades in a row or 5 losing trades in a row? Different market feedback, right? You operate differently after 5 losses than after 5 wins, right? You operate differently. After 5 wins, I will increase position size. I want more. I want to try to stab the market better, to milk the cow. After 5 losing trades, I will decrease my position size, for example, all right? If I had 5 good trades, but then I see the market breaking down, all right, and I see that there's no setups proliferating, so it's telling me that, you know what, I need to get out of my positions and or tighten the stops and, be in cash for now. Wait to see what's happening. Market feedback, so important. And we said that it differentiates between traders as well. You have the losing trader, which is the new trader that will lose perpetually until he understands the principles, the fundamentals, technicals, and has a consistent edge he can do over and over again. And again, to do that, you don't need a lot. You don't need to be the best ever. You just need to know some to move from loser trader to boom and bust trader, right? Now, this is where market feedback, because loser trader does not know market feedback whatsoever, but at least when he goes to the boom and bust, he at least knows, as I said, the fundamentals. He has an edge, he has technicals, but he didn't master market feedback. That's why he gives everything back again after he makes it over and over, right? But once you master, or at least understand, the concept of market feedback, then you can become a consistent trader, and you will be one of these 10% only that become consistent traders, because you understand market feedback. And you will start small. You know the fundamentals, you know the technicals, you have an edge, you understand market feedback, and your P&L will be growing over time, right? Will be growing over time, right? You have more winners. You will make more money on your winners than you will make on your losers consistently. You will be able to take out of the markets money consistently over and over and over. And you will be one of the 9%, which is part 90% out of the 10%. But the last 1% are the wildly profitable, and what differentiates them is mindset. Mindset. And first things first, reach consistently. Your goal is to become a consistent trader, even if it's a small, right? Making $1 million, by the way, is not a small feat, all right? It's a lot of money, and you can make that as a small, consistent trader. After you do that, you're consistent for a few years, right? Boom, you can get to being a wildly profitable trader, hopefully using a lot of mindset, right? Now, this is it in a nutshell. This is it in a nutshell, and this is why market feedback is so important. Market feedback is so important because overall, this is what differentiates you from boom and bust into consistency. And that is what you're after. All right, everyone. Hope you liked what I had to say and you found this really helpful. I enjoyed making this video. And again, if you didn't do it so far, you are my Patreon. Subscribe to my YouTube channel. Give me a like, give me a comment, ask me questions. Try to be more, in tuned in the asking and knowing. All right, everyone. Hope you like what I had to say. Cheers. Stay tight, and until next time, no edge, no trade.